I love Google the stock. I love Google the company. We're going to break down the company, look at their recent earnings and why they fell over 7% yesterday and why I love that. So let's go check this out right now. Google is a $1.8 trillion business. If you bought every stock out there that they have, you'd spend 1.8. And guys, enterprise value of 1.81. This $10 billion difference here is essentially their net debt. Cash against all the money they owe to people, net together. So this is a great balance sheet. Look at this company. $70 billion in free cash flow in the last year. $70 billion. 54 is their average over the last 5 years. Now, price to free cash flow of 26 and PE of 24 feels a little high. But when you have such a high and growing return on invested capital, 15% over the last 5 years and 17% over the last year, it shows me that this is the kind of company that can reinvest back in itself and really drive those returns up. Now, why did they fall 7% yesterday? They reported lackluster ad sales. Guys, I'm sorry. If I'm going to make some bet on the next 10 years about Google's online ad revenue going up or down, I'm going to bet it's going up and by a lot. Why? They own Google.com and they own YouTube.com, the two largest search engines in the world. And the entire world isn't even fully connected to the internet yet. You don't sit there and say, hey, Yahoo that, Bing that. You say Google it. Even when you say Google it, if you don't even use Google, you're still saying Google it. That's how amazing Google is. So let's take a look at their financials the last quarter. So guys, they reported $86 billion in revenue, not for the year, for the quarter. The biggest mistake I made, guys, I think I got a little greedy trying to buy Google at a much lower price, but we'll get into that shortly. Just look at this growth. And guess what? They've had drops. They've had drops, and they're going to continue to have drops. But the key is that you compare the quarter to quarter, $86.3 billion in the last quarter of 2023 versus 76 in the last quarter of 2022 versus 75 in 2021, probably coming off the full COVID year after. So I look at this and I go, what a wonderful, wonderful business with a good margin. You want to take advantage. The stock is down 7% because, oh no, their ad sales weren't as much. Guys, find me a single company in history that has beaten and done well every single quarter, and I show you a Bernie Madoff type company. It doesn't happen. It's not possible. It's going to go like this, but you want to keep buying as they have slight pullbacks that make sense financially. Let's go check out their 8 pillars real quick. Here's their 8 pillars, guys. Only 2 X's here. 5-year PE is 31.66. 5-year price to free cash flow is 33. Again, sounds expensive, but it's over the last 5 years as they're ramping up. And if a company can reinvest and drive a lot of profit, because look, their gross margin is 56.6%. Every time they sell an extra dollar now, 56 cents of it goes to the bottom line before taxes. That's a huge number. That's what's so great about Google. That's why I think their profit margin, as they get bigger, as they become a larger company, will continue to grow. Okay? That's what's so great about Google. Let's see what analysts are saying about Google for the next few years. They expect about $7 per share in earnings this year, growing to $13.45 over the next 4 or 5 years. All right, pretty good growth. Well into the double digits. Let's look at their revenue growth. Again, double digits. $349 this year, going to $500. So guys, before we get in the stock analyzer tool, revenue growth was 13% from 2022 to 2023, coming off only a 1% revenue growth for 2022. Okay, for the entire year, revenue growth was 9%, unaudited numbers. Operating margin, guys, look at this. Their operating margin went from 24% to 27%, and their other income and expense went from a negative $1 billion to a positive $700 million. Net income, guys, look at this absolute mammoth. $13.6 billion for the quarter in 2022, 20.7 last quarter. For the year, went from $60 billion to $73.8 billion. Huge jumps, guys, huge. Now remember, they fell because the ad revenue came in a little bit lighter than expected. But look at this. Google search, $42.6 billion in the quarter of 2022. They reported 48 last quarter. So still almost a 15% jump. YouTube ads, $8 billion to $9.2. Google Network, 8.475 down to 8.3. Did that drive that drop? I don't know. But still, overall Google advertising, $59 billion to $65.5 quarter over quarter from the previous year. All right. Google subscriptions, platform device, et cetera, 8.8 billion up to 10.8 for Google services total. Now, Google Cloud, that's their Amazon Web Services, the Microsoft Azure, that's their cloud computing, went from 7.3 billion to 9.2 billion, over a 20% increase year over year's quarter. That's a big jump, and it's a very high margin business. Overall, guys, I look at this thinking to myself, where's the bad news here? Yeah, because they didn't hit the numbers that Wall Street was expecting. Use that to your advantage. That's why I like it when companies fall off of earnings releases. Use that to your advantage. With that volume going down, if you want to learn to sell puts, which I'll get into later, that's an opportunity for you to sell puts at lower prices and make income along the way while you wait for the companies you want to fall to the price you want. The question to ask yourself is, what is the right price? And remember, we want to buy great companies at good prices. What's a good price though? That's the hard part. So I'm going to pull up our stock analyzer tool. Now in our stock analyzer tool, this is where I think I failed myself as an investor. I wanted to get a really great return on Google, as opposed to sitting there saying, if the market's going to do 9 or 10%, what's the appropriate return I need for a company like Google? That's to everybody, to each their own. So what I started to do was say, okay, let me make assumptions about Google for the next 10 years in our stock analyzer tool. And I'm going to make these revenue assumptions, profit assumptions, and go down the list. So I went in here, guys, and I did revenue growth of 5, 8, and 11%. Now, remember, the analysts were expecting about double-digit revenue growth over the next 5 years. So I'm okay with this 5, 8, and 11. It might be conservative, actually. For my profit margin, I did 22, 24, and 26. Same with free cash flow. And remember, their higher gross margin might drive that even further up. But I'm just going to stay there. Now, PE. What's the PE I want to apply to this company? Before I did 20, 23, and 26 for both PE and price of free cash flow, guys, I'm going to be a little different. I'm just going to do 22 across the board, just to make it easier. And for my desired return, I put 9%, the market return. So this is basically saying, this is what I think Google is worth. Because 22 PE sounds like a lot, but again, guys, high return on invested capital, a great moat. You should pay a premium. Warren Buffett, in his first purchase of Coke, paid 30 times earnings. It's okay to pay more for a better company. Absolutely okay and should be done if that's your investment philosophy. And my investment philosophy has changed a lot over the last few years. I've gone from, let me find situations where a stock is underpriced by 30 or 40%. Let me own it. When it hits my price, I sell. I've started to realize how lazy a person I am, and I want to buy a great company at a reasonable price and just let it grow. So I hit the analyze button. Boom. Guys, I have a low price of 120, high price of 230, and a middle price of 168. So if I pay today's price of 142 and my middle assumptions occur, our software will show you that's about 11% return. That has a pretty good margin of safety in there. So guys, you know what I'm going to do? I'm going to sell puts on Google because I want to be a little bit greedy because I think the market's overpriced. I'm hoping for a pullback. I'm going to sell puts at 135 so that I can get paid to wait for the stock to hit 135. So if you want to learn how I do that, we talk about this all the time in the community. We have a 7-day free trial of our community and our software at everythingmoney.com. So thank you very much for your time.